cut the audio.
Just yell it out, right? Say live and then
live.
hit.
All right. What'd you hit?
Hey everybody, it's Seth here. We are going a smidge early. We've had some sound problems in the past couple of weeks, but we're figuring it out. We'll do a studio walkthrough here in a couple of weeks to show you guys all the insanity behind the scenes here with Don and everything. But moving forward, we're going to cut the mics. We're going to show you guys our wide angle of Paul and I just getting ready for the live stream. So if folks want to jump on and start the chit chat, that's wonderful. Paul's got his super tight shorts on today, so we're going to cut the audio a bit, and then we will jump back on here at 1 o'clock. Yeah, so get ready, everyone. We'll see you soon. Okay, guys, 4 minutes. Keep it up out there. 4 minutes. We're coming live. Paul's girding his loins over there to get after you. So stay with us. Love you guys. Okay, guys, 2 minutes. We're rocking here. Paul is in the potty and he's mic'd up. I'm going to go live to Paul in the potty. Let's see if this works. Let's see if he's. Yep, there it is. Yep. Did you hear it? He was sprinkling. Yep, he's got a. Yep, that is hilarious. Yes, we are going. 2 minutes. Here we come. We're coming at you, baby. Oh, bum, 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 bum. Hello, everybody. How are you? Welcome. We are so stoked here. We are killing it. Stoked. Hold on a second. Donnie, why is there echo? Of course, there's echo. Love you. Hey, hey, hey. You guys look great. Paul, am I picking up on your... How are you doing, Paul? I love you.
I'm doing wonderful. How are you doing?
Oh, God, you do sound good, bro.
Do I?
Yeah, you sound really good. Here we go. I'm in. Guys, how are you? How's everyone doing? Thanks so much, everybody, for joining us today. Hello, 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 hello. Everyone's in the chat. It's incredible. Don, I'm getting some sort of feedback. I'm getting some sort. Oh, it's Paul. Okay, got it. Hey, everybody. Sorry, I'm here. Hey, everybody. Listen, thanks everybody for joining us. Paul and I have been so stoked for the last 2 days since our last live stream. It's been incredible. We meet, we talk like it's becoming everything we do, right, Paul? I mean, it's just getting ridiculous out there.
You know what? I want to make note. This is something that I want to talk about. I actually decided yesterday to pull back even further from our day-to-day businesses so I can focus on Dynasty Owner, investing, and the Everything Money channel. And I've talked to Seth about how I want him to be full-time at some point on Everything Money. So we're working on that. It's going, it's coming along well. And yeah, I love it. Because Don's already right now, not full-time, but he's doing a lot of his time on Everything Money and Dynasty Owner, all of it on those two, but either way.
No, we have a lot of Don fans. Don, are you here? Can I hear you? Try it one more time. Try it one more time, Don. Hello. We're working on them. In that, folks, we are going to be doing today, airline stocks. Paul, airlines have been decimated this year.
Yep.
You know, I'm seeing stock prices go way down.
David
Obviously,
Spicer's on.
Oh, David Spicer. Yes, we do have an announcement. Paul, should we get right to it?
David Spicer won the $100 from last week. Congratulations, David. What happened was we were on the podcast, and I said if we get to 100 likes, I would give $100 away. So Seth kept stalling. Yep. And we picked a random person, and it happened to be David Spicer. So David gets it. David, Don's going to put his email into, I think it's info@learnfromus.com. Email David, email Don, and we'll get your PayPal or Venmo information. We'll Venmo you or PayPal you the money. So congratulations to David. That's awesome. And
we got to that last week because Paul was looking at it. We had like 40 likes. As always, guys, make sure you're smashing that thumbs up. We had about 40 likes down there, and Paul said if we can get to 60, something amazing is going to happen. We went an extra half hour, but which, Paul, we can't do today. We are going an hour today. We better get cooking. But if Paul said if we could get to 100 likes, which seemed absurd, he'd give away $100. And you guys came through like a boss. We got through it, and oddly enough, we had Don randomly pulled a number, and it was David Spicer. So my man.
And I was stoked about that because David's very active. When Don told me, I'm like, what? David Spicer won? He goes, yeah. I'm like, that's awesome because David's very active, very engaged. I love him.
So last live stream, we hit 2,000 subscribers. We can't thank you enough for all the support. You guys are congratulating us. My son Gio was on last week. And so we're at 2090 now. And again, like I say, folks, for us, it might as well be 2 million. We're treating it that way. It's been incredible. But with that said, Paul, tell me your thoughts in general about airlines. Let me give you some stats. A year ago, around 2 to 2.5 million people got in an airplane every single day in this country. I was shocked by that number. We're talking almost 1% of us, a little less than 1% of the people in the country every single day get on an airplane. When COVID hit down in March, it was down almost 90%. We're talking 120,000.
Oh, I think it was even lower than that. I think it got to like 60,000 people a day.
Incredible. So it's been climbing up a bit. If you go to September, it's around 700,000.
Yep. So
people are now getting on airplanes, and we've seen the TikTok videos of anti-maskers and maskers fighting each other, or vice versa. And so overall, Why did you want to do airlines, and why did you want? Obviously, we had some people on the chat tell us they want airlines. So why did you want to do this, Paul?
I think airlines are a great industry to look at because they struggle so much over the decades. You'll have airlines go through bankruptcy after bankruptcy, but there are a few out there, tend to be the smaller ones that do very well. I love Southwest. I was fortunate enough to say, let's buy Southwest at 25. Literally, it went up straight from there. I was hoping it was going to go down and go down. I'd be able to dollar cost average. It went straight up to 42. Today, Southwest just announced that they only lost $1.2 billion in the quarter or something like that, which is way less than their daily money bleed is decreasing. I like certain airlines because I think certain ones will survive this, and you should invest in them. I think they're the smaller ones. United, Delta, American Airlines, they tend to be a little bit more bogged down with costs, and they don't have the love that the Southwest, Alaska, Hawaiian Airlines have. So we're going to look at some of the big ones and some of the small ones today.
Paul, we're going to we're going to use our 8 pillars. These 8 pillars are coming to you. I know we've prefaced this a lot. Paul is working on it. He just got the numbers from Morningstar on how to have an autofill of all the top stocks coming to you in a personal app, the Everything Money app. We are working for that. I don't know if any of you out there have ever done it. Paul has created an app. It takes literally hundreds of thousands of dollars to put together. And so we're trying.
The data feed alone.
Go ahead, Paul. The
data feed alone, with me limiting the stocks to 5,000 stocks, is $30,000 a year. Just the data feed. That's $2,500 a month for me to give you guys what I've already created, what I already paid for on my own. So it's an extra $30,000, but I want to do it because I think the Everything Money app will be incredible.
So we're going to incorporate the app into our Patreon page, which is coming. We're building it. Frankly, folks, all this is coming at us so fast. We're having a hard time sort of keeping up with it. And it's not even so much Paul. It's definitely me trying to keep up with building the Patreon out. Not so much for your support, but just for more access to this incredible person to your left in his tight shorts that are.
There's no tight shorts today. It's rogue shorts.
Hugging his
Which
buttocks.
you wore these exact shorts last night to basketball.
Yeah, I know. That was playing basketball. His hugging his buttocks in such a sexy way.
Can we get the love?
Yeah, let's get the love. We're going to go over Southwest. We're going to use the 8 pillars. That's where we were going with all this, Paul. I'm sorry.
Well, we're not going to use necessarily the 8 pillars right now on South. On
Are
the
you
airlines.
serious? Tell me about it.
Here's why.
Go on.
Their recent quarters have been so bad, it's going to greatly affect everything. We're going to do a few of the things, but we're going to look about why these companies, you should look at them for the long run. The 8 pillars, I think, would be a little deceiving right now. It would make the stock look worse than it actually is. Does that make sense?
Well, yeah. I mean, they're down pretty bad, right? So I mean, it's going to look pretty darn bad. So
yep, we have 50 people watching right now. We only have 29 likes. Come on, guys, let's check that up. So if you guys look here,
this is Southwest.
Southwest.
Go ahead, Paul.
Last quarter of last year, they did $5.35 billion in revenue. Then in the first quarter, and remember, we were shut down for like the last month of it, they did 3.9. In the second quarter, they did 742 million. Guys, this is a huge drop. This is an 85% drop in revenue over a 2-quarter period. As another example, a lot of times with stocks, you look at the same quarter of the previous year. Again, same thing, 5.5 billion down to 740. Huge drop for Southwest, right? So these are things to keep in mind. And by the way, they just announced the new quarter ending September 30th. So we can look at that. It's not updated here yet, but they lost 915 million last quarter before this new quarter was announced. So guys, huge problems in terms of losses. However, then I go to the balance sheet and I want to figure out, okay, what is their cash like? Like what kind of cash are they sitting on right now? Guys, look at how much cash they raised. They went from 2.5 billion end of last year to 12.35 billion. They have the cash.
This is Southwest.
This is Southwest. They will withstand this problem. And I want to make note.
Go ahead.
Southwest did not lose a single dollar in a year. And it's going to be, for the first time, it might happen this year, but they've never lost money in a year, which is unheard of for airlines.
So tell me, Paul, you know, we talked about this when we did Southwest a few months ago, but it's good to get an update. Like you have this mindset that airlines are not going away.
But
go on. Tell me, you said
airlines aren't going away, but doesn't mean you should invest in airlines because of that. Because I would always sit there and say, car companies and airlines had massive growth from 1920 to today, right? In the sense of more people fly, more people have cars today than 1920. But how many airlines and how many car companies have gone bankrupt in the last 100 years? A ton. I mean, hundreds and hundreds of them each. So when people say, oh, it's a growing industry, you should invest in it, like cannabis, it's not the reason. You still have to pick the best companies within them that'll withstand. Let all the riffraff go away and pick the best companies. I think Southwest is the best finance company and the best operated company. Fuel costs, they manage very, very well. And that's very important when it comes to an airline.
Now with fuel going down so much, I mean, it looks like, I mean, would that help the airlines recover even more?
I mean, that will help, but when fuel costs are going down, it usually means demand is down. So demand for travel is down. It's kind of like they do a good job hedging their fuel. It doesn't matter what they're doing. They do a good job hedging their fuel.
Benjamin, Llewellyn, Don, we see you all there. Carpe diem, Benjamin, we see you all, Laren, Cody. We don't. Paul has talked many times about REITs. We can get more thoughts on those later. But we're going to stick to airlines at the moment. Paul, keep going with Southwest.
Okay, so again, I would look at cash flow just to see how much cash flow they have by quarter. Let's look at the quarters now because I want to see how much cash flow they lost in the last quarter. So remember, guys, the way airlines work is they're going to pull money in for a trip in the future. That is cash in, but it's not revenue yet until the revenue is earned by the trip happening. So the cash flow number, I imagine, is not going to be, look at that. They had positive cash flow last quarter, guys. So not only do they have $12.5 billion of cash sitting in the bank account, they also had positive cash flow of $750 million. So I'm looking at this going, wait a second, do they even need the cash? They actually had positive cash flow in the second quarter of 2020. So you guys got to remember, there is a difference between money coming in and being revenue. It's called accrual base. What they do is when the money comes in, if the trip hasn't happened yet, they can't book it as revenue. It's just money in and it becomes a liability. They owe that money in the future to a trip. So when you look at the cash flow, that's how it can differ very greatly. Carnival Cruise Line's another one. Their cash flow is increasing even though their revenue is decreasing because they haven't earned the trip yet because the person hasn't gone on the trip. So Southwest in the second quarter had a positive $750 million in cash flow, even though they lost money. That's a very important aspect to look at.
What are some of the other pillars that you'd like to look at with Southwest? I mean, is something like shares outstanding?
I won't look at the shares outstanding. It's not. I imagine they maybe. I don't think they did a share offering. Well, because remember, I don't think we can't even do a shares outstanding because it doesn't go by quarter. I don't think. Let's see.
And Nicholas, we'll definitely talk about Jets here, of course, the ETF that covers all these airlines for sure.
When you're a Jet, okay, their shares outstanding has increased, guys, and that makes sense. It was decreasing, and then it increased. They probably issued shares to finance some of their money, and I'm okay with that. They're going to stay in business. And from the looks of it, they're the kind of company who will start buying their shares back and decreasing them once this catastrophe is over. I still love Southwest, guys. I still think it's a $60 stock at some point in the future. $60+ stock. I got fortunate buying at 25. It's currently at 41. I don't think I'm not buying more shares right now because I still think there's some uncertainty in the economy. But if you buy now, if your outlook is 2 or 3 years, I think you're going to make a good return on that money. Yeah. I don't think you're going to go wrong buying Southwest today, is my opinion.
Shall we move to Delta?
Let's do Delta.
We have some folks all over the world, as always. Dr. Dathy, we will get the Lufthansa. Paul, is that an airline?
Lufthansa.
Yeah,
is that what it is?
Yep. And like I said, Nicholas was looking to do jets, so we'll get to that. Cody says he sold his Delta today. Hope y'all don't tell me I made a mistake. Let's see. Paul, let's get into Delta.
So Delta, I didn't look at the
market cap.
21 billion for Delta. What was it for Southwest? Can somebody look at that real quick for me? I didn't look it up.
We'll get Don on it.
Okay.
Okay. What about PE? It's not there?
No, it's not there. Guys, so here's the deal in Southwest. On Delta, they've lost money in the last 3 quarters, even before COVID hit, I think. Is that even before COVID hit? No, it's right when COVID hit. So they've already announced they already have the numbers here for September. What, for some reason, what's his name does not. Well, Southwest does not. But guys, look at this. I went to the wrong number. They've lost $11 billion in the last 2 quarters. I mean, Southwest lost $900 million, and they've lost $11 billion in the last 2 quarters. I mean, I'm sorry. That's just, let's look at their balance sheet. I'm sure they have plenty of cash because they probably want to have, look at the cash position. The cash position is good, $16 billion in cash, but they're bleeding $5 billion in a quarter. I mean, Southwest could lose 13 quarters in a row of $1 billion and be okay. Delta has 2 quarters of losses, 3 quarters of losses, and they're done with the cash on hand. So they're going to dilute the hell out of you. They're going to have to take on more debt. Avoid. I think you made the right decision by selling Delta today, in my opinion.
Did Cody sell it? Oh, yeah, great, good idea. Now, listen, Alex brought up a wonderful point. Do you think that a lot of businesses are going to work from home, and that's going to negatively affect the airline businesses?
That's a great question,
Alex.
Alex.
Do you think moving forward, will we ever get to the peak numbers of 2019 and early 2020?
For travel?
Yes.
Absolutely, guys. We're
without
growing,
business travel.
We're growing. We're still a very national company in the sense that people are doing things around the country. Look at 9/11. When 9/11 hit, people thought the airline industry has changed forever, and it had changed forever. But airline travel is up a ton since then. It's just you got to remember these are things that happen, but people still want to travel. People still want to have headquarters all over. They want to have offices around the country. There'll still be business travel. Will there be a change to it? Of course there will. But people will still travel. I mean, who would have thought in March that travel would be up 1,000% since March or whatever it is? People said, oh my God, it's terrible. I just don't believe that this issue is going to be a permanent issue forever.
Would you like to look at sort of a low liars, Hawaiian Airlines?
Yep, let's look at it.
Don, are there any questions I'm missing?
Not that I can see. The market cap for Southwest was 24.5, by the way.
So it's more than Delta, but you have a much more stable company.
Just a couple building more.
Yeah.
Okay.
What is the ticker for Hawaiian Airlines? Is it Hawaii Airlines or Hawaiian Airlines?
I think it's Hawaiian.
How do you spell Hawaiian?
I know. Why don't you type in, why don't you do American while we wait for Hawaii?
Let's look at Alaska Airlines.
Oh, you like this one?
I have some puts on Alaska. If everybody remembers our last video when we talked about the puts, I have some Alaska puts.
Guys, give us your thoughts on puts. We started the last video on Paul's investments. If you look at our last live stream, this was on Tuesday of this week. We got into the exact stocks Paul's investing in. Are we talking a couple $million, Paul, or not that many in these stocks?
It's at 7 figures.
And then we got into Paul's puts, which got very confusing for me and some of our viewers. What I would say is Paul and I are looking to do perhaps a more in-depth put analysis and options analysis for maybe some more people who might be on an upper echelon level of investing knowledge, which frankly, it's not me, I assure you. So okay, Paul, let's get to Alaska Air. Here we go.
So look at Alaska. Their revenue.
What's the market cap on Alaska?
It was at $5 billion.
Okay, small.
So their revenue isn't down as much as some of the other ones, from 2.1 billion to 309 million. They showed a loss of 214 million. Okay, versus 262. So still a big loss. Let's go to their cash position, their balance sheet. These are more of a regional company, $1.5 billion. So looking at that, if they have $200 million in loss, even if the loss was cash-based, it's going to be 7 quarters before they. So remember, Delta was 3 quarters away, and Alaska Airlines is 7 quarters away from losses. Let's go to their cash flow. I didn't look at their cash flow for Delta. I just don't like Delta. I don't care what their cash flow says. And again, Hawaiian Airlines had positive cash flow last quarter. So they had 1 quarter of negative cash flow. It was only $80 million in negative cash flow. And now they have positive cash flow of $250 million. I look at Alaska and I'm like, it's a regional airline. By the way, Alaska flies direct from LA to Manzanillo. I've flown Alaska. I love it. I like it a lot. I have puts on Alaska for a reason. I think it's a very solid, stable company. I'd be buying more of the smaller airlines than the bigger ones, like Alaska.
Say that again. I'm sorry.
I like the smaller airlines versus the bigger ones. I like Alaska more than Delta and American Airlines.
I'm sort of shocked by that, Paul.
Are you?
Yeah, a Hawaii symbol is HA. Are you done with Alaska? What do you think?
Yep, done with Alaska. Oh, it's Hawaii Holdings. That's why I didn't see it.
Ah, go ahead.
I like Alaska Airlines is my point. Okay, Hawaii Holdings. Something tells me it's a $700 million company. They were paying a dividend like other ones were. Let's go to their financials. $700 million company. Their revenues, oh my Lord, these are bad.
Talk to me, Paul.
95% lower. Look at that. 650 to 30. Yeah, ooh, is right.
Say that again. Are you saying 650 mil down to 30 million bucks?
Yes. Their profit went from 80 million peak to $107 million loss. Okay. Balance sheet.
Oh boy.
$590 million in cash, which is ironic. It's not that much more than what was it before. Oh, they have a lot of money in current liabilities. Okay.
Dave, we will definitely look at Air Canada next.
Cash flow statement. They do not have free cash flow right now. All right. Hawaii Airlines, I think you're going to do better buying Alaska and Southwest. Financially, Alaska and Southwest are better than Hawaii. I don't know why. Is Hawaii Airlines, like, are they only going to Hawaii? I mean, I don't know where they go to. Is it focused on Hawaii?
I mean, I do feel weird when I get on an Alaskan plane headed to Mexico, but yeah, some videos I was watching was that yeah, they think Hawaii travel is going to pick up, so that Hawaii Airlines has a little more a little more juice to squeeze.
Yeah, I would. I mean, to me, Love, Southwest Airlines, and Alaska Air are the better buy here. And I think just in general, they're the better buy. So what was the other one we want to do?
Benjamin's saying that Hawaii had a mandatory 2-week quarantine that just killed all travel out to those
yeah,
islands,
that makes sense. I mean, that really makes a lot of sense, Benjamin. So
why don't we look up Dave? Dave wants to look up Air Canada. Paul, do you go to Canada often? I love Canada. There's something about the people. Oh my God. The people, the places. I just really love.
Well, Toronto's a beautiful city.
It's gorgeous. I love you people.
Okay, another $5 billion company. I mean, look at these charts, guys. I mean, this is just plummet city. Jesus Christ. All right, $5 billion company. Again, guys, you're looking at the financials. Revenue down about 90%. It's a big revenue drop. Net income, they've lost $2.7 billion in the last 2 quarters. That is no bueno. That is no bueno.
Oh boy.
So I look at the market cap saying it's a $5 billion company. They've lost, how much was it? 2 billion, 2 point some billion in the last 2 quarters. That's rough. Cash, they have a lot of cash. They have $5 billion in cash. I think the total current, it's gonna be a lot. I can have that. So cash flow. Let's go see how their cash flow is done last few quarters. Have they grown? Oh my Lord. I'm gonna go ahead and say Southwest and Alaska are still winning guys, they have negative cash flow. It's getting worse. I'm not saying it's not gonna get better, but at least Southwest and Alaska seem to be getting more reservations and increasing their cash by doing that.
Paul, can you, okay, why don't we look at, so Air Canada is a no-go.
Correct.
For you.
I just look at it going, guys, when you're looking at an industry or sector, if you want to buy in that industry or sector, buy the best ones. But let's talk about Jets, the ETF. Because if you believe in the sector, I just look at it saying, I want to buy the best ones. If I want to be in a sector and there are companies that qualify for what I'm trying to do, I'm going to buy those best companies. I'm going to avoid the ones that are bad. Why would I mean, it's just, then you might as well, if you're going to buy everything, buy the ETF. You know what I mean? So Jets is the ETF. And the reason I like Jets is, as you can tell, some of these airlines are down 80, 90%. Jets is only down 40% from its peak.
Mm-hmm.
But it also has things that are not necessarily just airlines. There's cargo jet. And look at all these JetBlue, Allegiant Travel, Delta, United, American, SkyWest, Air Canada, Hawaii, Play. And I've said to you guys before, when you want to make a bet on a sector, because you see a sector beaten down, the ETF's a good way to sit there and say, listen, I'm not going to go analyze every individual stock, but I can analyze the sector. By the way, when we create the Everything Money app, one of the options we're going to have in there is putting 20 or 30 stocks in there, and it'll do an 8-pillar analysis for all of them combined. So basically, you'll be able to look at an ETF and say, I'm going to put all the stocks of the ETF in here and see how it pops up, to see how the whole industry and sector does cash flow-wise, 8 pillars-wise.
Did you want to look at someone requested Lufthansa?
Lufthansa, let's try that one. I mean, these are foreign companies, so that's the other thing, guys. The Everything Money app will be limited to U.S.-based companies from what I'm gathering right now. All right, Lufthansa is another $5.5 billion company, so call it $5 billion. They're very big internationally. So my guess is revenue. Whoo, look at that. 80% drop in revenue.
Wow.
Profit is 2 quarters of almost $4 billion lost. So let's see their cash flow. Another bad cash flow one. But in the quarter, ironically, they had, well, that's not ironic. I'd want to see how this quarter is doing, but another negative. See, guys, Southwest had positive cash flow last quarter. The same quarter for Lufthansa is also another $1.5 billion loss in cash flow. That makes me go, why is Southwest and Alaska, why are they able to get more bookings and generate positive cash flow? The other ones are not. You're looking at 2 companies here. The entire industry is losing money cash flow wise, and they're not. To me, that screams these guys know what they're doing. It's either their business model, their way of approaching. It's something that they're doing different. And I like that.
Let me update all of our new watchers. We welcome you in. Paul, as always, is analyzing his stocks. Last week, we got to 100 likes. We're a little thin today. We might have some sleepy people out there. So make sure you're smashing that like button. We love you. I don't know if Paul's going to do the $100 giveaway this week. We shall see how far we get. In general, we do want to thank you. Make sure you subscribe in the bottom right-hand corner. Paul is talking about the app of things to come. We're talking about Patreon. I'm moving forward with a Patreon page so you get more exclusive access.
What are you doing after 1 o'clock?
I have some photo shoots and stuff. Everything.
Here?
2 o'clock, you mean?
Was that what you're doing?
No, I'm going down to Columbus. And
2 o'clock, I mean. Okay.
Yeah.
Got it. All right.
But anywho, But yeah, smash that like button, pretty please. We will get to some of your, obviously we're gonna try and get to most of your questions if we can to. People are asking about options, Paul, versus owning stock. In general, I want to get to you. Say our viewers, which there's 60 some odd of them at the moment, say they would want to throw a few $1,000s. You're still saying how long should,
I don't know if you mean for, you mean for a stock?
yeah, for airlines, like how long would you keep airline stock?
So this is a question I get a lot.
Go on.
The question I get is, Paul, if I like a stock and buy it, when do I sell it? The reason I like doing this analysis is I determine what I think the stock is worth. And theoretically, when the stock hits that price, I will sell it. Now, the longer it takes to hit the price, the company could have gotten better. So let's say I think Southwest, I bought Southwest at 25, right? And I think it's worth 60. But maybe that takes roughly 2 years to happen. Well, in that 2 years, the stock I think is now worth 75. So I'm going to hold on to it for a little bit longer.
I see.
The whole point is if you have other opportunities out there, maybe you exit the good ones, the ones that have hit closer to value, and you buy the more depressed stocks of relative to value. This doesn't necessarily always work. You could just be a buy and hold person like Warren Buffett. If you love Southwest forever, which I think there's an argument to be made to keep Southwest forever, that might be something I do, then you just stick with it. And you sit there and say, listen, I don't care if it goes to 90 here. I'm still going to stick with it because it's a great company and they're going to do better and better and better. I don't know. But the whole point is you do what makes you comfortable. I'm a believer of depends what the company is. Southwest has been a leader in the airline industry for 47 years. It's going to be a hard company for me to sell unless it got to some agree. Maybe I sit there and say, hey, if it gets to 150% of this, I would sell it. I don't know. So we have to figure that stuff out.
Alexander brought up, what if the government starts bailing out airlines? Would that, I mean, what do you think about that, Paul? Bailout?
Which ones are more likely to be bailed out? The ones with financial problems. Which ones didn't have as many financial problems? Well, Southwest and Alaska. That's why I like those ones. The government comes in, they're going to dilute the hell out of everybody.
All right, okay, this is good. Paul, someone said, should we look at Expedia? Is this totally off topic, or do they have
It's travel.
Okay, go ahead, Paul. Thanks.
Well, I got to go back into the.
It's a EXPE. I don't know who brought this up, but thank you for bringing that up. Expedia, yeah.
EXPE.
Yeah.
.com.
They got a great jingle. Smash that like button while you're waiting there, guys, folks. We love you, guys and gals. Yeah, make sure.
How many gals do we have out there? I think I got her.
If you're a woman right now, please say something in the comments.
Matt Jensen, you don't have to do that.
That's Paul's chess coach. But maybe my wife might be watching, but if not, it's just a bunch of guys.
Matt's been talking smack to me all day, so I'm gonna go ahead and.
Okay, do you want to do the 8 pillars on Expedia?
Yeah, let's do the 8 pillars on Expedia.
What is the market cap for Expedia?
Okay, it's a $14 billion company, guys. So remember, we don't look at stock price, we look at market cap. Why? Because this is actually what it would take to buy every single share out in the market.
So now Thirsty Program says they're dual sex, so we do have one woman watching.
I'm both.
So keep going. And we will get, listen, Adam, we will get the Boeing for sure and Airbus for sure. Go ahead, Paul.
So it's a $14 billion company. You buy all the shares out there. Doesn't matter what the share price is. What matters is the number of shares outstanding multiplied by the share price is the market cap. Okay?
What is that market cap again for Expedia?
14 billion. Now, no PE. So they are losing money currently. We'll figure out. So that's an X right there. Profit margin, X right there. Guys, this is one of those like the airlines. We should probably look at we need to look at the financials on a quarter-to-quarter basis. So the ironic, okay, that's annual. Let's go quarter to quarter and see how bad it was.
And Tom says he could switch over to non-binary if it helps our stats. So Tom, please do that. And Mo is watching. He could do that too. Yep, for sure. Good job, guys. My
parents ever assigned me a gender. Good job.
Good.
All right, so look at their revenue. Okay, so their revenue in the 2019 second quarter was 3.15 billion. And now it's 560 million.
Oh, we have a woman. Stop everything. We do have a woman watching. Yes, Carpe Diem is yes. Thank you, gal. I love you. I love you. I love you. Go, keep going, Paul.
So this is about an 84% drop in revenue, guys. That's a big drop. I imagine the travel would be hurt pretty bad for this one. Let's go to their net income. Ooh, they've lost $2 billion in the last. So here's the concern I have, guys. In the last 2 quarters, they've lost $2 billion. If you look at the previous. How many quarters? 1, 2, 3, 4, 5, 6, 7, 8. They haven't even made $2 billion in the last 8 quarters. So in the last 2 years, they've made 500, $1 billion, call it $1.1 billion, Maybe not even $1.1 billion. I'll call it $1 billion. So they've lost 16 quarters of profit in the last 2 quarters. That's a tough one. So let's say it was stable, and even their profit quarterly was if it was annually. Let's go see how their profit annually looked. Annually or anally? That's not even paying attention.
Listen, the chats are flying in, Paul. At some point, we're just going to have to hire somebody. Well, we're working on that. We have an intern in today. We're going to have to hire an assistant to monitor all these chats. There's so many amazing questions, Paul. I mean, we could just cut the show right now and just do a Q&A, but keep going, Paul. I'll get to some of your questions. I love you guys.
In the last 4 years, last 5 years, it took them to make $2 billion. They lost $2 billion in 2 quarters. In half a year. Let's go to their cash flow, because this is what's going to matter to me a lot. Let's see if there's. Yeah, this is a tough one, guys.
No, Sodrante, we did Southwest earlier in this live feed. Just rewind back a bit. People are asking about Southwest, but Paul still loves Southwest, and we'll probably recap later. Keep going, Paul.
So, guys, in their average year, they were making 500. In a good year, they were making 500 million, and they're selling currently for 14 billion. So even though they go back to pre-COVID highs, they're still selling for 30 times profit. This is a no-go for me at this price. You got to wait a lot bigger drop for this one, like a lot bigger. Like I think they're a 70% drop. Like I look at this going, guys, where's the upside potential? This company's not generating cash flow. They're not generating more income. How are you going to justify paying 14 billion? We'll go to momentum though. Let's see what the momentum looks like. Good call. So guys, I'm avoiding this at all costs from a fundamental standpoint. I keep forgetting the momentum stuff.
Now, are you, tell folks, Paul, are you avoiding it just because you're too disciplined? What about the more undisciplined people like myself?
So this is where you might look. The 50-day crossed over the 200-day back in early September at $100 or so. It's now at 94. This is a positive momentum outlook. If you look at this, like there's things called channels. It keeps merging. At some point, it's going to merge, and wherever it breaks out, it's going to go up or down. You're going to want to sit there and watch this thing at this level at $100 and go, okay, at $100, where's it going to go? If it goes like 105, 110, it could skyrocket from there. And Mo's better at the charts than I am, and we're going to bring him on. But these are starting to converge on themselves. If you see this channel, like this, what's it called? I forget what it's called. But the bottom line is, that from a trading standpoint, this could have a do or die at some point here pretty soon, where it's either going to skyrocket up or skyrocket down. So this might be one to throw a couple $1,000 at and just see what happens. But put a stop loss in there. That means pick a percentage that you're willing to lose that automatically sells if you hit that. A lot of people put 5 or 10% on there.
People are threatening to shut down the channel if we don't do Boeing BA right now. I mean, they're gathering with their pitchforks. They want Boeing bad. Now, Boeing. Don, I'm sorry, Don. What were you saying?
He's good. I was talking to him.
Now, I would say Boeing has a special near and dear to my heart. I'll do a 10-second advertisement read. My secondary company, which is DGF Spray, dgfspray.com.
How much does he pay us for promoting?
It's a dry graphite film spray. We sell to NASCAR. We sell to drag racing. We sell to airlines. And Boeing is our biggest customer. I love Boeing. I deal with them all the time. And they buy like so many cans of spray from us. It's incredible. But keep going. Give me Boeing, baby.
Well, I hope you bankrupt the company. So, $94 billion company right now. Guys, we all know about their issues. The 737 Supermax. Here's the interesting part about Boeing. Look at this peak right here, guys. This is like $430. It fell to 89, I think, was the low here.
What is it? Tell me what. So I guess, Paul, that's a good thing, because you always say that people always think it's going to go higher and higher and higher, and that this could never happen.
Yeah, if somebody said to you in early 2019, Boeing's a huge company, they're going to fall 80%. You'd have said, no chance. Look what happened. You might sit there and say, yeah, but it's COVID. That's the point, guys. Go look at the financials. Go look at their financials now. Their financials are awful. So look at this. In 2019, because of the 737 Supermax.
Do this a little slow, Paul. Just slow,
this doesn't
slow
even
down just a smidge.
This doesn't even include COVID right here. This is just 2019. They lost $1.6 billion because of the Supermax. In previous years, $1.1 billion, $1.6 billion, $750 million, $2 billion, $1 billion, $7 billion, $1.6 billion. So they had very consistent, but this is how fast it can drop pretty quickly because of one issue like that. So let's see how they've been doing the last few quarters. Okay, their revenue is down about 30% from second quarter last year to this year. And the profit is down a loss of $3 billion to a loss of 2.4. So it's getting better.
Oh, sorry. I pressed the wrong sound.
I mean, it's just bad. But look at the previous quarters, $2 billion. I mean, it's Is this quarterly? This can't be quarterly. It is quarterly. Wow. Yeah. So they're then I was looking at something wrong here on the income statement for the yearly. There's no way I was looking at the right thing. Maybe I just like skimmed over.
If you love this content that Paul's bringing you, the free Y charts and all the knowledge, all you have to do is just smash that like button.
Guys, I was on the wrong line.
Go
this
ahead,
happened.
Paul. Oh, there you
10
go.
billion, 8 billion, 5 billion, 5 billion, 5 billion, 4.5, 3.9. They lost 600 million last year. So let's say they get back to the average of the last 5 years. So let's say they get to $7 billion in profit. Okay, for a company like Boeing, it's so big, it's so established, you can't give it a big PE ratio. Let's say we sat there and said the historical PE is 15 on it. So they make $7 billion a year times 15, $105 billion market cap. That's for a stabilized Boeing. That's for Boeing back to its normal days. It's currently 95. So
go ahead, Paul.
What I'm sitting there saying is, I think Boeing is worth about $100 billion if we were stable right now. Are we stable right now? They're still not past the 737 Supermax issues yet. American Airlines just recently announced they're trying to bring it back next year. They still have this major downturn. You're telling me that you know how many orders have been postponed and delayed?
Benjamin's saying right now, before the crash disaster, didn't they have like 10 years of future plane orders? So my question is, who's going to take over as the number one? Is this Airbus?
I think Airbus is still being affected themselves. And I do think the 737 MAX will be solved, and it'll be it's a great airplane. It's a great airplane. It's super efficient fuel-wise. And you look at a company like Southwest, they want to convert all their planes at some point to the 737 Supermax. It's just had a bad rep lately because of these two crashes, which are bad, don't get me wrong. But back to the valuation, this company is worth probably what it should be worth right now if it were normal times.
Filming it, maybe our viewers are confused too. Are we talking about stock crashes or actual plane crashes?
Plane crashes.
Maybe I missed it. I didn't.
Remember they had those two plane crashes.
Like there's some. I mean,
so like a plane's in the air.
I understand.
And then it falls to the ground.
Which ones? I mean,
that is a plane crash.
Malaysia. Are we talking France? The ones that got shot down.
What was the 737 Max Supermax? Does anybody remember where they were?
I don't remember. Sorry. Okay. With that said, so what do you think is your take home on Boeing?
I would wait. I think Boeing, from a fundamental standpoint, it's selling for what it should sell for during normal times. Let it weed out its issues. It was at $90 before. I mean, of course, if it falls again, I'd buy. I used to have options at $100 for it, but I sold those out when they plummeted in price because the stock went up. So I made a lot of money profiting off that. So I got rid of it. But what was I going to?
Thirsty's saying that Boeing has government contracts, which is true. There were more than two crashes, and Matt is reminding us that they were in the air. So I don't know what that means. Listen, JJ had some interesting questions, Paul. We're gonna slow the roll just a smidge at the moment. Here we go. You ready?
Yep.
Based on an average 9.9 return of the SPY, year over year over the past X amount of years, how do you pick and choose different companies and weigh that against inflation within the U.S.? Do you take into account future value of money so you aren't losing purchasing power?
No, I never factor
Expand on it.
I don't factor in inflation in my investment decisions on stocks. And the reason being is I can't control inflation. For somebody like you guys, when you're buying for the long term, you can't control inflation. Don't even think about it. It's going to be there. It's going to happen. It's going to affect us all the same, essentially. Make good, sound investments in good, sound companies or good, sound ETFs, and you will do well in the long run. If inflation kicks your butt, it's going to kick your butt either way. You can't avoid inflation. It's there. It's in the markets no matter what. You're not going to be able to affect it, so don't even worry about it. I worry about the things that I can worry about. And those are things like fundamentals and ETFs and market value. And so I can make a decision for myself based on that. That's what's going to drive your returns more over the long run. I do think, I haven't looked at the history of this, with more inflation, you'll probably have a higher stock price appreciation. So it might account for that, because then income goes up, multiples stay the same. With inflation, the income goes up, and you're going to have a more valuable company that's going to account for it over the long run if we have steady long-term inflation.
Yeah, so we got some information. Yeah, Ethiopia and Indonesia Airlines had crashes.
That's right.
I can't remember. Okay. Someone said, can we squeeze in? Benjamin's asking, can we squeeze in Wynn? What is that? WYNN?
It's a hotel in Vegas. You don't know Wynn?
I've been to Vegas a few times. No, I don't know it.
Yeah. The guy, the owner of Wynn, Steve Wynn, he was showing off a $100 million painting to Barbara Walters, and he's blind in his right eye, and he turned and put a hole right into the painting.
Oh, I think I saw
his
this
elbow.
meme. Yeah, how funny.
Somebody go look that up. He was just like, $100 million painting. Boom, right through there. Okay, so anyways, Wynn Hotel. So the play on Wynn is, by the way, Vegas, Nevada got hit with 28% unemployment at one point because the entire strip was shut down. Mo and I are going to see, what's her name? Shania Twain.
Britney Spears. Oh.
Shania Twain on December 4th in Vegas.
Oh, we darn.
Mo and I have our little mandate going.
Wait a minute.
Right, Mo?
The two of you are just going to cuddle up with a couple cowboy hats and tight jeans and go see Shania Twain? What's wrong with you?
We're not going to cuddle up, but we're going to go there. I think we're staying at Wynn. Where are we staying, Mo?
David's just saying, what the hell? Yeah, I mean, what are you talking about?
But now that Mo's like dating tons of women, should I have said that? Either way.
Yeah.
He's probably going to bring one with them. Let's go, girls. Let's go, girls. So anyways, Wynn, again, let's go to Wynn and see how they were stabilized because clearly their profit's insanely low and stupid. But let's go show you the quarterly right now to see how they've done the last few quarters. Guys, look at their revenue. Their revenue is down 95%. Is that right? Almost 95%. Their profit, oh my lordy, from $100 million down to a $640 million loss. Let's see if they're at least getting bookings with quarterly cash flow. Let's see how their quarterly free cash flow is going. Nope, they don't have any free cash flow. So it doesn't look like bookings are really increasing a ton. So let's see their normalized. Let's see what they're worth normally. In a normal market, if they were stabilized in a year, they brought in $7 billion in revenue and they made 120. All right, guys, this is going to depress a lot of people. 123 million times 15 equals $3 billion, call it. Let's go. So in a stable, based on last year's, but you know what? Time out. That was an obscure year. Hang on a second. What is going on here? Do you see this here? Ooh, they have very inconsistent earnings. You guys see this? 160, 600, 500, 730, 730, 200, 242, 745, 572, 123.
What year is that 200?
Which one?
4 or 5 years back, right?
Yeah, so 2015 or 16, 15, 16, 17, 18. Yeah.
It's weird.
Okay, so when it happens like this and there's big fluctuations, this is where I like to take the average of the last 5 or 6 years, 7 years, and multiply by numbers. So what's the average? 200, 440, 1.2, 1.7, 1.8, 1. I call it $2 billion divided by 5 equals $400 million times 15 equals 6 billion or so. That would be if Wynn was back to normal, their finances were out of the problem, it'd be a $6 billion company. Right now they're selling for 8 billion. So I'm going to go ahead and give this big X to Wynn because it's already selling for more than I want to pay for it, even if things were stabilized.
No good.
No good. Let's go look at the technicals. It has been beaten down a lot. Let's go look at the technicals. Ooh, it's even negative on the technicals. You've got the 50-day going below the 200-day around March, and it hasn't rebounded, although it is converging. So it means it's probably maybe it's gonna go up here soon. I don't know, because it does look like it's been a negative downward. But yeah, this is all around just not good.
Did we look at Airbus? Did I miss it?
We did not look at Airbus. That's
At
Boeing's
Airbus
competitor.
Yep, let's look at Airbus. Damn, I need to sell to them. I need to sell that DGF spray to them.
You do.
If time, how about a quick look at Amazon or AMGN? Is that Amazon? Amgen, sorry.
Isn't that Amgen's biotech, isn't it, Jeff? Mo would know too.
AMGM. Airbus, let's get at it.
All right. Airbus, look at this. $60 billion company. No PE, not a shock. $60 billion company. Let's see. In normal times, they lost money last year, 3.6. So they averaged about $2 billion in profit over the last 5 years, call it. Let's see quarterly what they've done.
Yes. Benjamin's saying DGF sprays is what's keeping Boeing from going bankrupt. That's right, Benjamin. You got it right.
DGF spray would keep their planes in the air.
That's true.
Too soon?
I don't think so.
DGF, not DGF. Airbus has lost a lot of money in the last few years.
DGF's profitable, Paul.
I know it is. We hear that all the time.
Keep going.
So their profit, $2 billion over the last 5 years. So roughly, it's a roughly $30 billion company stabilized. Why are they so expensive? So you're looking right now at $2 billion in profit. It's going to cost you $60 billion to buy. Think about 30 times profit. If the company was making the average of the last 5 years profit, So even stabilize. This is the thing that happens, guys. You get stuck in these like, oh, look, it's beaten down a lot. But this point was just that expensive, guys. It's like if I said to you today, hey, Seth, what's your house worth?
$500,000.
Okay, $500,000. I'm going to sell you your house for $2 million. What would you say to me?
No.
Okay, now it's 800,000. Look at it's 60% off. Isn't that awesome? And you'd be like, what?
Go on.
It's still overpriced. It's still not worth the 500,000
that
you're paying for it. That's an example here. This is a company that people look at the price and go, oh, look, this is a big discount. That's not value investing. Value investing is looking what should it sell for? And at this price, you're massively avoiding it. At this price, you're like, yeah, I'm still avoiding it because it has problems now and it's not worth what it would be worth if it was selling for, if it was making the money it was making before. So I'm looking at going, I'm avoiding Airbus as well. I know it sounds depressing, guys, but I am. And it's a foreign company. Even their technicals aren't the best. Look at the technicals. Fell below the 200-day. And it's now converging better, though. It's still starting to come back up, and the 200-day is coming back down. So it could go over, and that would be a very positive momentum sign. And, channels, it's converging there. So this could be a play here soon, guys. If this 50-day goes above the 200-day, which looks like it's going to happen soon, this could be a play for momentum to go up.
Benjamin's saying they really loved your Ferrari analogy about pricing and that he uses it a lot and uses it to explain value investing. Now, can you go over it one more time? You're like
the Ferrari analogy?
Yeah. Can you draw it on a board?
So so it's the same thing I did with your house just now, Uncle Seth.
Mm-hmm.
Do you want to exit? Yes.
Yeah, but Ferrari is much cooler to talk about.
Okay. There's a Ferrari. Let's pick a Ferrari that we know the price of.
And we will do Y Pro today. People were asking on Tuesday. We're going to get to it right now.
Let's say there's a Ferrari. So we're talking about the Ferrari. Ben, can you be more specific? We're talking about the Ferrari versus Chevy analogy or the Ferrari value analogy where I said, would you buy this Ferrari for this much?
Value analogy. That's what he said.
Okay.
Yeah.
So
are you going to own a Ferrari, Paul?
Yes, I will.
What color? Will I?
I like white a lot.
Oh, like a Wolf of Wall Street. Yeah, remember
not that white, like a creamy white.
Okay, yeah, great Ferrari.
So Ferrari, guys, Ferrari is a great brand, right? You have Ferraris now that start at $300,000. Ferrari's a phenomenal company. Ferrari made a phenomenal car. If I told you to pay $500,000 for this car, what would you? $800,000 for this car, what would you say?
No,
you'd say no. It is the best car out there. Why aren't you willing to pay whatever it takes to have it?
At some point, there's a limit.
At some point, there's a limit. If you know you can buy a Ferrari for $300,000, why would you pay $800,000 for it? And if I just got the price of $400,000, what would you say to me? If you're smart, you'd say it's still not worth $400,000. I can still go buy another one for $300,000. Why would I just take it? Because the discount's half.
Yeah, the chart still looks like it's on sale, though.
But I would say to you, but it's a Ferrari. It's the best car company. It's the best car out there. Again, it doesn't matter if it's the best car out there. What matters is the price to the value. This is the value. Value is what you get. Price is what you pay. Think about that one again. Value is what you get. Price is what you pay. That is the big thing in all investments. You're trying to compare price to value. And yes, there are qualitative aspects that make something great. Ferrari is a great car. It is a great company. It is everything. But you shouldn't pay whatever it takes to get it. That is the difference between value investing and what most people do, which is, this is a great company, you should buy it. I disagree. This is a great market, you should own real estate in it. I look at it and saying the more people like it, the more you should avoid it. Because then it's a popularity contest, and what happens to the price? The $300,000 Ferrari is now selling for $2 million, even though you can go buy it from the dealership for $300,000.
Mm-hmm.
That is the analogy that we sit there and talk about, because everybody knows Ferrari, but yet I see more people do more research on cars than I see them do on stocks. That always bothers me. Well, why would you? You overpaid? I could have gotten that car for $1,000 less. Congratulations, but you went and paid $10,000 for a stock that's worth $4,000.
Do you think you'll own a Lamborghini?
I will not own a Lambo. I'm not a Lambo kind of guy.
Okay.
Who asked that question?
Oh, a lot of people are wondering about. I just asked it. I mean, yeah. This is.
And by the way, Thirsty Program, you are right. For a lot of Ferraris, they keep them exclusive to people who already have Ferraris.
Now JJ wants a Ferrari versus Chevy analogy now. But wait, before we do that, let's get the White Pro. Just me, who's one of our avid fans. It keeps. Yeah, let's do that. White Pro. All YouTubers drive Lambos. That's true, Paul. We got to get one of those.
What's White Pro?
Just me. What is White Pro?
Oh, whoops.
Don, what is that?
I just took a picture of the screen.
I haven't heard of it.
Okay.
Okay, White Pro. It sounds racist, to be honest.
Mm-hmm. What if it is, Paul? White Pro. While you're there, we've been going a long time now,
We don't have
Paul.
White Pro.
55 minutes. Geo says, look at Tesla. This just turned into a car show, Paul. Once we start talking about Ferraris, here it comes. What is AMG? Oh, White Pro, White, WIPRO, David says. Wipro? Sorry.
WIT is, okay, what do they do? I don't even know what they do.
Paul's going to read what they do here. Here we go. Establishing 45.
IT services. They
IT
tend to have good
services.
finance. We're going to do Amgen next. Don't worry. We'll do Amgen next.
Amgen, IT company. Thanks, just me. Great.
Okay. $28 billion company, market cap, PE ratio of 21 based on the last 12 months, $28 billion to buy the company.
Profit number two, or profit margin is pillar number 2.
Quarterly, 16%. Last 12 months, about 15%. So we have a check here and an X here. But again, just because there's an X on one doesn't mean we just throw it away and don't care. I do notice they're not paying a dividend anymore. They went from 0.28 to 0.
Pillar number 3 is revenue growth over the past 5 years.
Okay, so now I'm going to make this bigger so everybody can see it. Okay, revenues. Over the last, that's...
Paul, as soon as we started talking about cars, YouTube algorithm started pushing this car discussion to other people, and more people are joining. So welcome to new viewers. Yeah, I swear, more people are here. I love you guys. Welcome. Paul's talking about, we went the whole hour talking about airlines, and we moved on to some other companies. White Pro, keep going, Paul.
Okay, so the revenue, good, decent revenue growth. It's a check, 7.8, 8.2, 8.45, 8.37. Oh boy, 8.6. Check mark there.
Okay, keep going. How about profit growth over the last 5 years?
So net income. Oh, this is nice. It's barely a check. The smallest check of all time, guys. 1.36, 1.26, ends up at 1.37. Check mark there, though.
How about shares outstanding? Pillar number 5. Number of shares, we want these going down.
Shares outstanding. It is going down. It went from 6.5 billion down to 5.8 billion. So another check there. This is pretty good so far.
Paul, we haven't determined what we're doing next Tuesday, but a lot of people are saying like a luxury car and car. Have we done a car live stream yet, Don? I can't remember. Have we done that yet?
Nope.
Yeah. How about a car live stream next week?
Good.
That sounds really cool. A lot of car fanatics. So yeah.
Okay, so
we can look at Austin Martins, Maybachs. This is awesome.
Maybachs.
I'm from Akron. Keep going, Paul.
So cash on. Oh shoot, I want to do cash on hand. Total current assets.
This is assets over liability. Pillar number 6.
Quarterly.
Make sure you guys are smashing that like button, pretty please.
So right now, the total current assets is 7.8 billion right here in the center, and total current liabilities is 3.04. That's a $4.5 billion difference. And guys, the massive check mark of all check marks. Why is this the massive check mark of all check marks? They have more cash on hand. They can pay off all their debts completely and still have $4 billion left over. So now the company, I have to alter my PE ratio because now I'm paying $4 billion less for the company because I'm going to get $4 billion in extra cash after paying all of his debt. So now it's a $24 billion company. That's 15% lower. It is now a check mark for the PE. PE is now a check mark. It went below 20.
Wow. Okay.
Yeah. So it's gotten better, right?
So this is all check marks so far?
All check marks so far.
How
Let's
about
go
number
see.
of shares? How about, pillar number 7 is free cash flow, which is cash from operations minus capital expenditures, Paul. You know I'm a specialist on this.
I know you are, big
and
shot.
This pillar, Gio says, my 10-year-old son says he loves the new soundbite. I love you, G-Bird, my little baby boy. Keep going, Paul.
All right, so.
Free cash flow, let's do it.
Cash flow.
Drew, you did turn in late. I love you. Jets. We talked about Jets earlier, maybe about 20 minutes in. Go ahead and rewind back. I love you. Thanks for coming in. Make sure you smash that like.
1 billion. 1 billion. 1 billion. 1 billion. 1 billion. 1.3. 1.1. Check mark. 3, 4, 5. 5.4 equals 1.1 on average times 20 equals 22 billion. It's pretty much there, guys. We had it worth about 24 billion. I mean, if you like this company, you're overpaying slightly for it.
Let's go for it, though.
But I like the financial statements. I say that if you like this company, you want to buy it. I don't think it's a bad option.
Now listen, this Just Me person, tell me who you are. You're on the comments. Paul, I don't know who this is or where you're at, but this is this person whom I love now gave us the info system last week, and they're really on it with some of these stocks. They really know what's going on. So you're kind of liking this.
Now let's go look. Yeah, correct. Now let's also look at the technicals, and it's on a positive momentum streak right now. Back in August. Now I will make note here, guys. There is a gap here. A lot of technical analysis people would say that at some point it's got to fill that gap. I don't necessarily know if I believe that or not. I don't care, but I'm just telling you guys from right now, it's on a positive momentum streak and increasing. So this might be a good momentum stock as well. Like you sit there and go look at like the lines. It's on this chart right here. Oh. So right now it's getting close to this lower level. If it drops below this from a chart standpoint, it might have more room to drop. And then you'd be looking at like a level of like around 370 or something like that to look at from a chart standpoint. This is from a chart standpoint. And Mo, you can comment in the chat further about that. But it has positive momentum right now. But if it does fall, you might want to be careful below $5.
So Just Me's name is Harsh, and he's I believe he's from India. So welcome all the way from over there. It's great to hear from you. Yeah, you're awesome, bro. Thanks for the help. Love it.
All right, guys, we have 5 minutes left. So, we did Amgen. We said we were going to do Amgen.
Yeah, let's do that. Jeff requested Amgen. And Tony was asking for BOMN. What is that?
We're not going to be able to do that.
No. You want to spill over a little late, Paul?
I would like to.
People are picking up here.
All right, 60 guys. Let's get to 70 likes. Come on, let's go.
This is good stuff, Paul.
Come on, kids.
Keep going. I love it.
All right. So Amgen. Now remember, guys, in the biopharmaceutical world, it all depends on what is the pipeline, what drugs they currently have that are going to be going to generic. You have to make sure this pipeline's good and they're not losing a major seller to generic companies. Because, for example, I use Propecia for my hair. I used it when I had to buy Propecia. It was like $180, $200 per prescription. I buy the generic now, and it's $14. Do you think I'm going to buy the generic versus for $14 or the Propecia because it's name brand for $200? I have money, and I'm not going to do that. Mm-hmm. So you better believe everybody else is going to do that. So it's very important that you keep track of what drugs are going to be lost to patents. So this is a $133 billion company. 133. Check mark to PE, it's less than 20. Again, historical average is 15 or 16, but I want to see it less than 20 because if they have some good growth, they can really justify it. Look at this margin. 30% in the last quarter, and it's about there for the net income for the whole year with 76% gross margin. Guys, this gross margin means for every extra $100 they sell, they're going to make $76 of that in profit. Drug companies have very high margins because after you make the drug, all it is putting it in little capsules and distributing it. It's very low cost.
Felipe,
so this is
Felipe, I love you. We're probably not going to be able to get the REITs, but Paul, we got to understand REITs. A lot of people are asking about them. I don't know what the hell they are, but we got to get after it. So
okay,
keep going. Pillar number 3, profit margin. Pillar number 2, I'm sorry,
revenue. Check marks on both.
Revenue growth over the past 5 years is pillar number 3.
Revenue growth, very small, guys. So this is something I want you guys to remember, that when you're going to pay a premium for a company, you want to see some growth out of it. Right now, the revenue growth is very, very small. 21, 21.9, 21.8, 22.5, 22.2. It is a check because it's still up from 5 years ago, slightly down from the previous year, but it is still a check. Now, here's the profit. Look at these money. Look at this money, guys.
Pillar number 4, profit
7,
growth.
7, 7, 2, 8.4, 7.8. Big drop here. You want to understand why this dropped big?
Tell me about it.
I don't know. I'm just telling you, it's dropped big for a reason. They must have had some big write-off or some big one-time charge or something. So there was a big drop. When these things happen, I would probably eliminate this year, not even worry about it, as long as you can understand what happened. So overall, they make an average of $7.5 billion a year, roughly. Correct?
Mm-hmm.
Roughly $7.5 billion a year. Now, standing, another check mark. We have all check marks so far, right?
Sounds like it, yes.
Yeah, check mark. They're decreasing their share outstanding. Now, my favorite ones. Oh, no, this is the cash, not the total current assets. So right now, total current assets is $22.9 billion right here in the center of the screen. Total current liabilities is $10 billion. Ding, 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 ding. We have over $12 billion extra in cash if we pay off our current debts today. That's a big plus. Another check mark. Now, cash flow. Last year of cash flow. Now, this is what I love, guys. You see this? They don't have to spend a lot of money on capital expenditures relative to operating cash flow. It's a very small percentage, 5 or 6, 7%, very small. I like that a lot. Warren Buffett says he likes companies that don't require a lot of capital to continue on. This is a company that doesn't require a lot of capital to continue on. So free cash flow, 9.1, 9.6, 10.5, 10.6. Why am I having a hard time counting today? 8.5. This is actually an X, our first X. It's decreasing cash flow, but that is an X. Now, 18.7, 28.7, 28.2, 38.2, 38.8.
48 and a third. Sorry,
46.5. Oh, what?
I got 48 and a third, but I can't see half the numbers. Go
ahead. I think it's 47.
Okay.
Divided by 5 equals 9.4.
Yep.
Times 20 equals $188 billion. And I think it qualifies, guys.
Let's take a look.
133. So according to this, now let me see. I'm going to put Amgen in my personal Excel sheet, which will be
and White Pro, right?
White charts.
No, just me saying it. Make sure you put White Pro on your watch list.
So Amgen, have they had a big drop in revenue lately?
Felipe, we did a video game analysis last week. He's asking about EA Sports.
Yeah, we've done that already.
We can certainly update that here in a couple of weeks. And let's see what else I want to say. Yeah, we definitely need to do a REIT. David's asking for a REIT stream going over fundamentals.
Oh, that's why. Whoops.
Yeah.
So guys, according to my calculator, it's close. It's not there yet. According to this, here's why. The price of free cash flow, we want it to be 20 times more. That's if there's a lot of growth potential in it. As you saw from the free cash flow there's not a lot of growth potential in there. So it can't really grow into that value. So you got to take a much bigger discount to it. These are part of the qualitative things to look at in investments. Do I like the stock? Yeah, but I like it closer to $200 a share. Good news is it's only at 227. That 10% drop can happen like that. So if you look at it right here, I mean, just earlier this year, it was at, go to year to date. I mean, it was there in March all day. And look, it was at 260 something here. Whatever. But we're going to go to this thing anyhow. We're going to look at the technical. So I would still wait a little bit on Amgen, maybe wait for it to go lower, but let's go see so here it crossed over right here at roughly 2 something. You'd be down a little bit. And it seems to be, the 50 days seems to be getting closer to the 200 day. So it has some negative momentum going right now. Let's see, channels. Let's see here. Oh boy, guys. So this one is actually peaking a little bit below this channel here. This, as Mo would say, this is probably an indicator if it stays here, it could have more downside to this, which is a good thing if you're trying to buy this thing at 200. Because if it goes down to 200, where's the next support level? Oh, look at that chart. That's messy. That is messy. Let's see, line there. Line there. Yeah, I think, guys, it could hit that 200 mark. But either way, Mo, you can look at this chart and maybe talk to people in the chat about what you think of it. But I think Amgen sounds like it looks like a great company financially, just not the price we want it to be at right now.
Should we wrap?
We're done.
Folks, listen, I want to thank everyone for watching. It's been incredible. Some things to come. Paul and I will do an entire episode on Revolve. We've got a lot of questions about Revolve. Paul and I have a lot of practice with this clothing company, and we're going to bring you a new video about Revolve. Some exciting things. We are getting that Patreon going. If you want more access to Paul for a small amount of money, you can get to him.
Well, more importantly, we're going to lock you in on a very inexpensive price for the app while we develop it. So that'll be support to be able to. Honestly, I told Seth yesterday I want him working on Everything Money full-time at some point here in the next couple years. It'll be very great. We'll be able to pay for the app to get done, and you'll be locked in at a really great price in the app forever. We have more exciting things to come. Paul and I are going to be working our butts off for you. We're going to be setting up a computer setup so we can go live basically whenever. We're thinking sometimes going live before the 9:30 bell for stocks. But I don't like getting up early, so we're gonna have a fight on that. But Paul and I are thinking about going live even more. We bring you 5 videos during the week. We're trying to go every single day at 1 o'clock. Trader Mo is another extension. Mo, we're gonna have Mo. He's on the chat here. We're gonna have Mo on. He's a day trader. He just said, by the way, Amgen is a short at this based on this chart.
interesting. So,
Yep.
so follow Trader Mo on YouTube as we build his page. But in general, guys, we appreciate the support. It's been incredible.
Don't look for Trader Mo yet on YouTube. We'll let you guys know.
Don't look yet, but it's going to happen. So stay tuned, guys. We are loving luxury cars. People are asking about banks and REITs. We'll do it all. We'll do it all moving forward. And as always, I just can't thank you guys enough for being so rad and awesome. And so, Paul, any last words?
That's it.
Thanks, guys. Thanks for joining us. We love you.
Peace.
Everything money.